Today we want to talk about enterprise resource planning and what the software is and does when you have an ERP system involved in the corporation. Enterprise resource planning came about in basically the late 1990s and early 2000s as a way to begin integrating the data and information of the corporation. Data warehouses had come to be in the early 1990s, and that gave an ability to pull common data sets together, integrate them all together, and then pull data out of them so that decisions could be made. But what they quickly realized was that data warehouses had their limitations. Data warehouses, of course, are necessary for an enterprise resource planning software, but what they realized that the data warehouse alone wasn't quite enough. So enterprise resource planning takes and integrates all the departments and functions throughout an organization into a single IT system. Data warehouse is just a separate bunch of data tables that become integrated so that you can do reporting, but enterprise resource planning is an integrated view of all of that data. This is kind of a picture that illustrates that you have a corporation, and the corporation has all these departments. Before ERP and actually before data warehouses, you had all of these different disparate systems out there that housed data. Now, data warehouses came and said, okay, let's take the data from all these systems and put them in tables and put them in a common place. So the data warehouse then went to all of these different places in the corporation. And doing so, they were able to integrate all the data together. But that view only allowed you to put a data analytics or a BI system, a business intelligence system, on top of that data and just get reports. It didn't really give you a holistic view. So what the enterprise resource planning software seeks to do then is integrate all of that as one data set, so that the entire enterprise can see, interact, and flow with all the data of the other entities within the corporation. So let's say that you have your financials all together, your accounting system. Well, your accounting system needs to know what procurement is doing. Well, instead of procurement being its own data set that has to then be put in a data warehouse, and then accounting has to go through and sift all that data and put it into the accounting system, the ERP system says, well, procurement has to purchase, and purchase is collecting money. So when we collect that money, we're going to tie it together with the receiving of the product, the ordering of the product, the invoicing of the product. All of those pieces and parts become part of the accounting system as well. So all of those things get integrated and become an interactive whole. So as we move on, what you see in another picture here is, let's start in the upper left. You see the sales quote and the sales order. Once the sales order is done, it goes to the warehouse. Now, sales order meaning we're selling the product. Sale goes to the warehouse to pack and ship that product out to the customer. Of course, then the next process that happens is you have to bill the customer, you have to receive payment from the customer, and then of course there's a possibility that there's returns or service after the sale, and so you have a receiving department that could accept those returns back if that's what ends up happening with your product. So what you see then is, before you also used to see these handoffs going around the circle. But now what you see with an ERP system is each one of those components interacts with the whole set of information in the middle there as an interactive to and from data pull and push from and to those particular entities throughout the corporation. So everybody gets the information they need when they need it, and it becomes much more real time, okay? So core ERP components are the accounting and finance, production and materials management, and human resources. Those are the core pieces. Extended components are comprised of business intelligence, the customer relationship management that we've talked about in other videos, the supply chain management that we've also talked about in other videos, and of course, e-business, your electronic commerce or your online commerce. All of those pieces are attached also to the enterprise resource planning software so that it can get feeds from all those as well and become part of the whole. So the accounting and finance pieces of ERP manage literally all of the accounting data. And when I talk about financial process, we're talking about budgeting. We're talking about financial planning. We're talking about planning where you're going to spend the money for the next year, where you're going to put research and development out, where you're going to develop the projects that say to improve the IT function within your company. All of those pieces and parts are part of managing the accounting data. And of course, the accounts payable, the accounts receivable, and asset management also become pieces and parts of that whole. A big system like SAP, for example, the core of SAP is literally an accounting system. And that accounting system already understands that it has material management and accounts receivable, accounts payable, and budgeting. And part of that whole core, instead of just being a bean counting sort of accounting system that we had in the past where you put in the debits and the credits and the bank accounts, all of a sudden this accounting system understands all of the other pieces and parts and movements within the corporation that cause financial transactions. So while you might not have budgeting that actually causes a financial transaction, budgeting becomes an important part that affects financial transactions and becomes a part of the ERP system. So production and materials management is also one of those parts that are added to an ERP system that not necessarily part of a regular accounting system, but you notice demand forecasting, production scheduling, job cost accounting. The cost accounting becomes very important when you put together your payments side of the ledger, your expense side of the ledger. And then, of course, quality control. Quality control is very much concerned with how many returns you're getting, how many payments you're making back out to customers to refund their money because they've returned a product, or even obsoleting a customer return and putting it back in the accounting package and basically saying it's destroyed or perished goods. So all of these items become part of the accounting system because they affect accounting transactions. So instead of just forecasting or scheduling the production, if you schedule the production, the accounting system then expects or can plan for the receipt of goods in order to support the production of your particular product. So if we look at a picture of how this happens, you have the sales forecasting and the operations planning. Operations planning is split into two branches. You have the detailed scheduling, of course, and production, but you also have the requirements that are there that support production and detailed scheduling. And of course, the purchasing part of it, you've got an accounts receivable, an accounts payable component with all the purchasing, so that everything is wrapped up into one big whole within an ERP system. Now, what about the human resources component? Of course, you've got payroll, which is an accounting transaction. You've got taxes, payroll taxes, which are accounting transactions. You've got benefits that you have to pay for your employees. All of these items have to come out of the human resources ERP component so that you can take care of your employees. Well, the rest of the ERP component is talent management. And so talent management becomes part of the ERP system, because not only is the need within the accounting system to manage benefits and payroll and compensation and all those that create transactions, talent management has to be plugged in there too, so that when they put out a requisition for a new employee, you look at the rec and you hopefully will be able to hire that new employment. And once that person's hired, it becomes a new accounting transaction. So why not start capturing all of that data at the very beginning of the data stream, rather than waiting for the employee to enter the system and then be added? So the human resources component is a full piece of the package, rather than just an accounting piece or an accounting look at human resources components. So other extended, we talked about business intelligence, customer relationship management, supply chain management, and of course the e-business components, which is the logistics and the procurement that you have for your online side of your business, and possibly even your web business or your mobile phone business, any one of those components where you're reaching out to customers and integrating with customers and selling through those types of mediums. So those other extended pieces are always part of an ERP package, so that you can get the data out of the system and get good quality information coming back to the executives to make strategic decisions. So how do you measure whether it's successful or not? ERP systems can be very expensive to implement. And being very expensive to implement, you of course want to see a return on that huge investment. The costs include the cost of the software, the consultants it takes to get it implemented for you, because you probably won't have all that expertise within the corporation. So, it makes sense to have some consultants that have been through this process before. You have, of course, customization and integration with your current systems that you're not sunsetting because you have a new ERP system. And then, of course, you have testing and training. So all of these costs build up. In early times, back in the 1990s, when ERP systems were just the beginning their run, now they're fairly mature, but back in the late 1990s, you ended up with a situation where it would take years to implement an ERP system. And the return on investment was probably minimal by the time you spent 2, 3, 4 years planning it, designing it, and actually getting it deployed. That's a lot of costs that have built up. Nowadays, it's a lot easier, a lot more streamlined to implement an ERP system, but it's still no picnic. My current implementation at Boeing, we're implementing an SAP system. Well, you take one piece of the puzzle and you implement that. Then you take another piece and you implement that. We have, for example, a component where we buy stuff for internal use, stuff that is taxable, that is consumed within the corporation. And we have those purchases coming in. That might be tools or scaffolding or products that we use on the desks or computers, things that we consume inside the corporation. We implemented just that piece, and now we're working on implementing what they call external goods, or things that we buy that become components of products we sell. Those things are not taxable, so those are a different component. It's taken a couple of years to implement each of those two components in a company as large as Boeing. So you see, what you want to do is implement pieces and parts nowadays instead of a big bang ERP system like they did back in the 1990s. Things that have been learned along the way have benefited the implementations today. So this is kind of a good trip through ERP, give you an idea of what it does, how it works, and the benefits that can accrue from a good solid ERP system, which in results gives you a good solid look at your corporation and makes it data rich so that you can deploy and get information such that you can make good decisions. So if you like the video and what you heard, hit that like button for us. Tell YouTube that they want to send out more of the videos to be seen by others. And then please subscribe, and we'll look forward to seeing you again. Thanks.